All right. Hello, everyone, and welcome to this special edition of Investing Masters with Prospareto. I've got with me Mr. Dipen Doshi, who's a SEBI registered investment advisor, our own investing master who has over a decade of investing experience. So, Dipen, welcome and thank you very much for your time.
Thank you, Akash. Glad to be here.
Okay. So, Dipen, let's start by talking about your blog titled First Hand Information Advantage Gone that you published on Prospareto some time ago. In there, you made a point that nowadays information required to make reliable investing decisions is equally and timely available to everyone. Now, I agree that is true. But despite that happening, I don't see investor returns being more or less equal. So what do you think may be the problem?
Yes, see, are the investors able to process that information properly and in a timely manner? See, today's business environments are very complex. So a lot of this first-hand information still needs to be analyzed properly and correlated. And then one has to act in a timely manner in terms of financial valuations. So if your analysis is incomplete or your timing is off, then obviously your returns will be compromised. So I would say it is very difficult for someone who is not a full-time investor.
But then we see a lot of individual investors doing quite well by themselves. So what may they be doing differently?
First of all, let us define what do we mean by doing well in direct investing. See, an index fund gives you around 10 to 12% average returns per annum. So anyone doing well in direct investing would have to generate a double of those returns, say around 20 to 25% compounded annualized returns. So anyone who is not generating that kind of returns is not doing well in direct investing, in my humble opinion. But to answer your question, there are investors who are generating that kind of high returns. So I would say they are giving a lot of time to their investing decisions, or they have someone else do it for them.
I would agree. I would agree to that. And no wonders that focus investing continues to remain one of the most popular recommenders precisely because of this reason, especially amongst our customers who have full-time commitments, either in terms of their jobs or businesses or family responsibilities. Yes, but despite all that, despite the proven benefits of this, I still get questions from investors asking whether it is justified to pay for good investing advice. Do you also get similar feedbacks?
Yes, I do. But it's really very simple. Say you pay around 1,000 to 1,500 rupees for 5 investment recommendations. That saves you hundreds and hundreds of hours of your own research, reduces your mistakes and losses, and then in turn gives you around 20 to 25% returns. So what more can you ask for? I would say your cost is easily recovered.
Well, recovered many times over, I would say, in that
Absolutely.
case.
But do you know what interesting question I get from subscribers?
No.
That subscribing to investment recommendations from expert is only for investors with big portfolios.
And why is that interesting?
Because a lot of the subscribers are in the age bracket of 20 to 35-year-old who've just started the investment journey with amount as small as, say, 50,000 rupees. They need to understand that long-term value investing is for all types of investors, because the percentage returns remains the same irrespective of the size of the invested amount.
Absolutely, a very simple fact. 10,000 rupees also earn 20% and 1 lakh rupees also earn 20%.
True.
All right. So that brings us to the end of this quick discussion, Dipen. Thank you very much for your time and for sharing the insights on what stops investors from getting good returns in investments. Thank you very much.
Pleasure is all mine, Akash.
Thank you.